Welcome to the end of day review for Wednesday, the 28th of February 2024. As usual, having a look at the economic calendar, we had one dreadful news event of high significance, and that was USD GDP, and that was negative, supporting longs for the day for the New York session at least. However, for the London session, we could trade either direction, and the primary bias was to short. Unfortunately, there just wasn't any way in. So maybe just moving on to the charts and starting off with the daily. What we know from the daily is yesterday at least we had bullish daily bias. However, today um, our bias was neutralized because yesterday's candle was actually a bearish close, although not a convincing bearish close, but a bearish close nonetheless. Then from a 4-hour perspective, what we do know is that the 4H market structure is bearish. You got your change of character, your break of structure, and then then we had the pullback phase. The pullback phase achieved its objective right over here, and from that point onward we assumed that the protein primary leg was developed and was trading with the objective to target the swing low. However, that didn't materialize, and then last week Friday we had the candle close of the deepest point of the original pullback leg, and that candle closure validated to us that the pullback leg had essentially extended itself. And because of that, what it then meant is that we needed to identify the pullback last point of supply. And whilst the pullback last point of supply doesn't pose any barrier to shorting, it does mean that we can consider counter trend longs. um, However, having said all of that, the bias for the London session being right around this area was to short, and then for the New York session it was to long, and I'll explain myself shortly. So moving on to the 5 minute, what we can see from the London session is that Frankfurt and London pushed all the way into this pullback phase, at which point we were too far in and too close to the lull to consider any trades, as we already reached our cutoff point, and that brought us close to the New York session. So we have this Asia liquidity at the top to target, and because we already moved 57 pips, which is 70% of the average daily range, that meant that we didn't need, or we couldn't short any longer, and thus we were looking for longs coming into the New York session. And from a long perspective, what that then meant is that we needed USD news to validate why this London low should hold. As you can recall, the USD GDP was negative, and that meant that we could long GBPUSD. However, there's a bit of judgment in the entry in that the London low of the day leg was created right here, and the leg that we're trading from is this particular leg. So what order flow occurs in this area is somewhat irrelevant, and the main extreme POI is actually this. And the issue is, under normal circumstances, you'd want to trade from this POI, or you'd either wait for a body break right here to extend the chain. um, However, in our case, because we got this Asia liquidity at the top, we can be slightly aggressive in our entry approach. And when the news came out, there's always this time delay where you're waiting for the news to actually come out. It says pending right here, and during that time price pushed down and then started proceeding back up. So I thought, if this is going to be some sort of liquidity in the leg, perhaps this is a good area to position myself. Although, having being in the New York session and knowing that we can be aggressive, and the fact that we in and around the extreme, we could have justified entering on this 50% fib level um, right here, and that would have meant that we exited at 6 p.m., which is right around this candle, for about 0.5 hour. Obviously now it's running to the top side, but in terms of my trading plan, the optimal exit time is the end of the London cross, which is 6 p.m. my time. So I would have been out of that trade for half an hour, which is pretty good, and it simply made a lot of sense. It was high probability, and we had the target. Whilst in terms of risk reward, it didn't really make entire sense. The fact that sticking to our trading plan would have yielded a net positive R was certainly worth the risk. So look, I think from my perspective, these Asia aggressive base entries are somewhat new, and I'm trying to still familiarize myself with it. So I'm okay with not taking this trade. I can understand that it is judgmental, and had I've been following my normal rules in terms of following strict POIs, entering right here wouldn't have been valid. I would have needed either for price to come into the extreme by using this as liquidity, or alternatively breaking this and then validating a chain and trading then, at which point we are out of our trading session and it's no longer reason to consider any longs. So that's pretty much my end of day review. Today there was a potential half hour, but realistically not a valid trade, or not a trade that I would have been tagged in anyway. So these are a bit judgmental, but it's just part of trading. Other than that, have a good trading, have a good evening, and we'll chat again for tomorrow's London outlook.